Breaking news out of Silicon Valley. And this one is sending shockwaves through the technology and financial world. NVIDIA is now using its own balance sheet as a weapon, and the AI race just got a whole lot more intense. That's right, folks. NVIDIA, the company that has essentially become the backbone of the artificial intelligence revolution, is making an aggressive and calculated financial move that could fundamentally reshape how governments, corporations, and tech giants around the world access the most powerful AI chips on the planet. We're talking about NVIDIA leveraging its own financial muscle, its balance sheet, to directly support and finance AI chip purchases. And if you think this is just another corporate finance story, think again, because the implications here are staggering. Let's break down exactly what's happening. NVIDIA, sitting on one of the strongest balance sheets in the entire technology sector, is essentially stepping into the role of financial enabler. Rather than simply manufacturing and selling its legendary H100 and Blackwell GPU chips and waiting for buyers to figure out the financing, NVIDIA is now moving to make it easier, potentially through financing arrangements and strategic credit support for customers, to acquire these chips even when the upfront cost is eye-wateringly high. We're talking about chips that can cost anywhere from $20,000 to $40,000 per unit, and data centers requiring tens of thousands of these units just to operate at the scale that modern AI demands. This is a masterstroke from CEO Jensen Huang and his team. Think about it. The single biggest bottleneck in the AI arms race right now isn't ambition. Every major tech company, every sovereign nation with a technology agenda, every startup with a billion-dollar dream wants NVIDIA's chips. The bottleneck is capital. The sheer cost of building out AI infrastructure is astronomical, and not every player has the immediate liquidity to write those checks. By stepping in with balance sheet support, NVIDIA is essentially removing that bottleneck and turbocharging demand for its own products simultaneously. It's a self-reinforcing growth engine, and it is absolutely brilliant. Now let's talk numbers for a moment, because the scale here demands it. NVIDIA reported revenues exceeding $80 billion in its most recent fiscal year, with data center revenue alone crossing $60 billion, a figure that would have seemed like science fiction just 3 years ago. The company holds tens of billions in cash and liquid assets. That financial fortress isn't just sitting there collecting interest. Jensen Huang is now deploying it strategically to cement NVIDIA's dominance at a moment when competitors like AMD and Intel are desperately trying to close the gap, and when custom silicon from Google, Amazon, and Microsoft is beginning to mature. The geopolitical dimension here cannot be ignored either. With U.S. export controls restricting NVIDIA chip sales to China and other nations on the restricted list, NVIDIA is doubling down on qualifying markets: Europe, the Middle East, Southeast Asia, and allied nations, making it as frictionless as possible for these regions to build their AI infrastructure on NVIDIA's technology stack. Whoever builds on NVIDIA's ecosystem now is likely locked in for a generation. Wall Street is watching this development with enormous interest. Analysts who cover NVIDIA are already noting that this kind of balance sheet deployment could accelerate revenue recognition, deepen customer relationships, and create a loyalty moat that no competitor can easily breach. Some are whispering the word transformational, and in this case, that word might actually be justified. NVIDIA is no longer just a chipmaker. It is becoming the central bank of artificial intelligence, deciding who gets access, when they get it, and on what terms. And in the most consequential technological race in human history, that kind of power might be worth more than any chip they've ever manufactured.